Good afternoon, everyone, and thank you very much for joining me. This is our NFP Live Trade. My name is Russell Shaw. I'm the Senior Market Specialist at FXCM. My email address is rshaw@fxcm.com, and today is Friday, the 6th of August, 2021. And I'm going to just bring up the high-risk investment warning. I'll keep this on screen. Good afternoon, Raymond, David, Sam, and everyone that's joined. Thank you very much for participating. Just want to do a sound check. Can you guys hear me okay? Just give me a Y in the questions. In the meantime, I'll bring up the market commentaries disclaimer. Okay, excellent. Great. Okay, excellent. And hey, Howard. Okay, excellent. Thank you very much. All right, it's 24 minutes past the hour, so I'll just show you the references quickly. We've got the Market Scope 2.0, that's where we'll be doing our trading. It's a trade on a live account, guys. So in the afternoon, we've been doing a trade on a demo account because we're working on a scalping system. We'll use a similar system today. It's going to be on a live account, so I just want everyone to be aware of that. And we'll also we'll look at also TradingView and Forex Factory. The reason I'll look at TradingView is because I'm using my live account as an FXCM employee. I don't have the US dollar as one of my instruments. I'm restricted from the from FXCM US dollar because it's an FXCM instrument. But it's a terrific instrument to monitor. So I'm going to just keep this on screen so we can see what the dollar is doing. We're going to be trading Euro US dollar. We'll look at Forex Factory as well. So we'll see the numbers. You can see that 870,000 is the expected number. So that's the number we want to concentrate on. To a lesser extent, in fact, we probably won't look at the 5.7% at all, or whatever it is. But 870 we'll look at, and we're going to look at the average hourly earnings. So we'll keep looking at that, and let's just go through the methodology. So first things first, this is the screen that we'll be using. This is a live account, I just want to reiterate. I'm going to change so we've got the 30-minute on our left. We're going down to the 1 minute on our right. So we'll be doing a scalp on the 1 minute. When I say scalp, it's not quite true. We're going to be trying to go for 20 pips. Okay, so that's our target. And the way we'll be doing it is let's just define success. Okay, success for us. Okay, success. 20 pips profit. That would be a successful trade, or 20 pips loss. We'll count that as a successful trade. Clearly it's not first prize, but we want to restrict the loss. So we're going for a 1-to-1 type of risk-reward ratio here. And another success would be if we can have a loss that is less than 20 pips. So if we can get the risk out, so because we're going to be moving the stop loss, hopefully we'll be given the chance to trail the stop loss. Then if it gets hit, hopefully it will be at a lower risk. We've got 3 minutes to go. What we want to do is we want to try and get an idea of where the longer term sentiment is. Sentiment and not trend, okay? That's why we're going to be using between 30-minute and 15-minute to get a sentiment reading here. Okay, we'll use those. And the left-hand chart is what we'll be using to get the sentiment reading. And then the right-hand chart is what we're going to be using to get our entry. And the idea is let's just assume that we are going to go long. Let's just assume, okay? Then the idea is we want to try and catch it on a pullback. Okay, so we're only going to put in the order after the non-farm payroll comes out, and then we're going to try and catch it on the pullback. And the way we're going to do that is we're going to watch the impulse. So there's going to be a terrific move one way or the other, depending if we beat or if we miss there should be an impulse. Let's just say the impulse is to the upside. Okay, we've got less than 2 minutes. Let's just say the impulse is to the upside. Then we're going to monitor the pullback. Okay, we're going to monitor the pullback. And as it comes down, we're going to be using limit orders to try and capture the movement back in. And we're going to be looking at an RSI, and the RSI, I'm going to show you the settings on it now. Again, if we're going to go in the direction of a impulse move in the long side, so we're trying to catch the correction, then we're going to wait for the RSI to hit below 20. So I know there's a lot of information in all of that. We do this every day on the US Open. We just did it on a 5-minute chart, not on the 1-minute chart. And if there's any questions, you can of course email me. We've got 45 seconds, and so I'll give out my email address towards the end if anybody needs it. All right. Also, I might go silent during the trade. It's just because I'm trying to concentrate. It's quite stressful. It's a live trade. I've got a big attendance here, so there's a fair amount of pressure. And let's take a look here. We've got another 15 seconds, and we'll get some sort of spark one way or the other. All right. Let's just. Okay, here it comes. Okay, so euro is getting hammered. So there's money going into the US dollar. So whatever the number is, it seems to be positive for the US dollar. Let me just see if we can get a reading on that. And we're going to get a reading for that on our Forex Factory. So we'll just patiently wait for the Forex Factory numbers to come through. There's usually a delay just because the data is so, there's so many people demanding the data. All right, so let's just try and get this. All right, so we've got a terrific number here. It's a big beat. It's a big beat. 943,000 versus 870. That's why we saw money piling into the dollar. We just want to try and get this wage number to see. Okay, and there's inflation, and there's signs of wage inflation. All right, so it basically looks dollar positive. If we go through to here, you can see that the dollar has been pushing up. Let's just go down, and it's fading a bit. Let's see if we can get in. All right. So you can see our left-hand chart. This is our filter for directional bias. So what we want to do is, let's just get everything in here. What we want to try and do is trade in the direction of, there's a big reversal going on here, of this zone 3. Zone 3 is the lower blue, lower red. This is a fast stochastic, and we want to see if we can get in on the impulse, a big one, on which side the momentum is. Now we're using 50 as the dividing line. If the fast stochastic is above 50, the momentum is positive. If it's below 50, the momentum is negative. Now the first impulse move was down. We've got a pullback, and we want to see if we can get in on the pullback using the indicator here. And so we're just going to carry on watching this for a few moments. We just want a little bit more time just to get an idea of the true impulse, and then we're going to try and catch a pullback. Let's see what happens. Okay, we're still just watching. It's now 3 minutes after the announcement. There's still a fair amount of volatility here. Massive sell down, then a massive buy back in, and now we're kind of almost flat for the last 3 minutes. Let's just keep an eye on this. Okay, here is a pile of money going back into the euro. It's heading towards our level here. All right, so there's a bit of resistance building here, so let's just keep an eye on this. Fast stochastics backing to get above. Okay, we're just going to hold for a few moments longer. So it's quite an odd, this is an odd non-farm payrolls. We're effectively flat for the non-farm payrolls. Let's just, so here's where we opened on the bottom of the hour, and 6 minutes later we just a tiny little candle right over there. So we're just going to carry on watching, but it's the volatility here certainly not what I was expecting. Howard saying, what am I looking for exactly to enter the trade? Well, the candlestick here is in our lower zone. It's in our bearish zone. That's the lower blue, lower red. So that's kind of given me a directional bias. Ideally, I'd like this, which is the fast stochastic, to be under 50. And I'm looking for the RSI to get into an overbought condition over here. Now, there it goes into that overbought. Now that we're in this overbought condition, we're going to effectively go in the direction of the zone analysis. So just bear with me for a moment. I just want to see if we come out of the zone here, or if there is some sort of resistance. All right, is it closing in our overbought area? Let's just take a look. Gee, it's just shy. I think what we'll do is we'll use our market order to come in if it closes below the low here, and we'll just use this as the reference candle. Let's see if we get that. All right, let's take a short here. All right, so we've gone in short here. The reason I've taken the short is we've got the potential reversal candle in here. So what we have is a swing high. 1, 2, 3. Okay, with the middle candle is the highest high, and the candle to its right has closed below the reference candle's low. All right, so the order's in, and you can see we do have a stop loss over here of 20 pips, and we've got to take profit here of 20 pips. Let's see if the market cooperates with that. Would you expect to see there to be a sell-off and the euro fall against the US dollar? I think I would expect the US dollar to benefit from the results or from the release. So if we go back here, it certainly seems to indicate that the Fed would be more let me be careful not to say relaxed, but they'd be happier with this type of data given where the labor market is. So they want to see an improvement in the labor market there, Nicholas, and I think that these numbers generally do that. And that means that, remember, we've got Jackson Hole coming up at the end of February, so the 26th to the 28th. I think that it would be a different Jackson Hole meeting if our non-farm payrolls missed today, but they seem to be a pretty good number, pretty solid number. And I think that what we are looking at now as market participants is effectively a some sort of communication of when the tapering begins, and that tapering theoretically should support US dollar. So I'm a little surprised at the lack of volatility, so to speak. I would have expected. So we had a big sell down, a big bounce back up. But again, I just want to stress we're not that far off from where we started 11 minutes ago. But I would expect this to be net a dollar positive. Does that answer your question there, Nicholas? All right, so the next idea is, let's just now pop this open, is we want to get the risk down if we can. So if this starts drifting lower, if we start drifting lower, we're going to start putting our stop loss down. And if we can get the risk out of this trade, it would make me a lot happier. Let's just let this run for a few more pips, and then we'll start. So we 5 in. Okay, so we 5 in. I think let's just wait for this candle to complete, and you can see I've got a little timer here. So another 18 seconds. Let's see where it goes. Okay, another 7 seconds here. We're going to start locking in some profit here. So I'm bringing it down. No, I beg your pardon, when I say locking profit, it's not quite correct. I'm going to start taking the risk out, and I'm going to start being quite aggressive So let's just see a few more pips here. Okay, just keep an eye on this, another 24 seconds. Okay, 4, 3, 1. Let's get this stop down. Okay, so we're just below break even now. Now, keep an eye on your stochastic here, guys. The stochastic's a terrific momentum indicator. Again, we speak about it a lot in our webinar series, and it's really a terrific indicator. What I want is for the stochastic to get down into the lower 20. Okay, so which is what we call this is what we call we're going to call this the lower quintile. And if we get to the lower quintile, even though we've got a take profit in, we're probably going to see some sort of a swing. Peter just saying the euro was already low before the NFP. Yeah, so you can see that here, Peter. That's what we're using here. Okay, this is the filter. So certainly that weakness that you're talking about being reflected in our trend filter, right? Let's just go back. We're pretty close here. Does that confirm your thoughts there, Peter? Okay, we're going to start locking in some profit now. So we've now got our stop loss below our entry, which is good because we're short, right? So we'll get something out of this. Let's just see if the downwards momentum continues. The stochastic heading to the right area, but let's just zoom in here. Let's just keep an eye on this. Okay, I'm just hoping we get some selling here because we're getting awfully close to getting stopped. It's teasing us. Wow, that came awfully close. Let's see the next candle coming in 30 seconds. There's just a little bit of lack of sensitivity here. So I chose the reference candle to enter. Let's just keep an eye on this candle now. Gee, it's really awfully close there. Okay, another 7 seconds, we'll get another candle. 3, 2, 1. Let's see what this next candle does. Blue or red. Okay, again, I just want to keep an eye on the stochastic. Here's our take profit. Okay. If we can get some more downwards pressure, if we can take this this trough out here, I'm going to move the stop loss down again. So let's just see if we can get price taking out the 117.82 level. All right. Again, keep your eye on that stochastic. It's getting to the area where the momentum push is building. Okay, we're going to lock in some more here. Being quite aggressive with the trading stop. Peter's saying that he's seeing the 117.60 as a support level. So that's the S3 level. Is that what you're looking at, Peter? We're pretty close. I'm going to drag the stop down further. Okay, so we're locking in some more. I accidentally hit the take profit there, so I hit cancel quickly. All right, so it's coming back now towards the trailing stop. And we've got another 10 seconds here. We're really close here. If we get some more downwards pressure, I'm going to bring the trailing stop down again. Again, it's teasing us. Take a look where the stochastic is. There's a terrific momentum build here. Okay, so we're 80% of our target. A lot of support here. This is the support I think Peter was referring to. He's seeing it on the daily chart. And of course, the support on a daily would be very strong for a scalp. The higher the time frame, the stronger the chart variables. Let's just keep an eye on this. Okay, just want the stochastic to keep its level here, keep the momentum push. Can we get this down? We're getting pretty close. I think we can start pulling this down a bit more. Okay, so we've locked in some more. Full 3 stopped out. All right. So we were stopped out, and we got 14 pips out of that. Let's just go up to the daily chart here. So you can see this S3 level acted as support here, Peter, just on the hourly pivot, and then when we combine that with the daily, Let's just see here. I'll just use a horizontal. You can see this is the support that Peter was referring to. So we've got a very strong support level there. Support, 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 right on top of the S3. Okay, so we took 14 pips out of that. So all in all, not a bad afternoon's work. Nevertheless, the key, I think, was to get that risk out as quickly as possible. If there's any questions, please go ahead and type those in. Any questions, please go ahead and type those in. So we're going to do another webinar on the US Open. So in the next 35 minutes, we'll do another scalp. That scalp, though, is going to be on a demo account. So this was done on a real account. The position size was extremely small. Nevertheless, I want to be honest. This is a live account. Okay, the one we'll do this afternoon is going to be on the demo. So join me for that. What is the value for each pip? Howard, won't give that away, but it was a small position. What will be the effect of the US dollar news on the long euro US dollar? I think that ultimately, if we go through to euro US dollar just on a daily basis, I'm just going to get rid of the let's get rid of the pivots because we're using that for trading. So if we just take a look at the our zones, so we use these zones to kind of get a reading of strength, weakness, and neutrality, whereas the upper blue, upper red would be considered strength, lower blue, lower red would be considered weakness, and between the blues would be considered neutral. Well, the idea here is the euro US dollar is pushing into the weak area. Now, I don't know how long it's going to spend there, but I would imagine that the non-farm payroll today, at face value, I mean, there's components to it. We're only looking at it at sort of a very broad level, but it looks dollar bullish. And I think that if that does lead to a tapering timetable, because that's what we're all waiting to listen, that's what we're all waiting to hear, I think that that would be confirmed by the euro US dollar moving into zone 3. And then if it does move into zone 3, well, that's the weak area. So I hope that answers the question there, Noman. Let me know if that's if I've answered you. If I haven't, please let me know. Thank you very much, Tando. Oh, that is a tremendous comment. I really appreciate that. Thank you very much. All right. I think what we will do then, ladies and gentlemen, is wrap up here. It went pretty quickly. Sometimes last month we struggled, but that's actually because I lost connectivity. It was most embarrassing. So if you were part of last month's non-farm payroll, I hope that this one made up for it. And we'll do another one in a month's time. So please join me for that. Otherwise, if you want more of this, we do webinars every day. Let me just put out my email address if anybody wants to contact me. You want to send an email through to this email address, please. rshore@fxcm.com. All right, guys, that's where we'll leave it. Thank you very much for joining me, and I want to wish everyone a terrific weekend. And I'm actually away Monday, Tuesday, so I'll be back on Wednesday. But we do have one more webinar at the US Open. Thanks, guys. Speak to you then.